Welcome, it's the Crypto Sniper. How are you guys? Glad to be with you. And we are going to do a quick update on XRP for you. Okay, so what happened? Well, there was a good trade, and congratulations to all of you who took it. Also, congratulations to all of you who took profits on your leverage trade at the 3.359, aka 3.36 target that we provided. As you will have realized, it has performed and made its target. And more importantly, all 5 stages of our breakout have occurred. And the 5th stage is progress decay, a pullback space. Now, what tends to happen is as you are making through the 3s and making your 3.36, the most bullish of articles, that's right, these articles here start popping into your feed. And you get tempted to do something else. For example, here we go, XRP holds strong. At the time when we were making the highest 3.36 target, there was in fact an article that said the next level $10 for XRP, which of course is lovely to hear. We all want to hear about it, and in fact you know from us that we already have a macro of $20. Please go away, thank you. And that particular target that we have provided is on a much bigger time frame. So you have your investment pot that you ride the macro setup on, and then I've mentioned the lukewarm pot that along the way you take extra and you convert it into XRP as profits at key moments. So amazingly, still at this moment, all my profits, and I did very well out of this move, and the community, the HVF trading community that you can contact to be part of on book a call link below, has done very well on this trade. It's still in fiat. It is still in USDC. So I am awaiting a time that I will convert that in XRP, and since that 3.36 run, it has indeed got cheaper. So obviously a key level of 3 was run, and it's natural to expect a pullback through it. You pull back as deep as 2.78 on a pullback, and then you've bounced. A bit of a capitulation through what was possibly a flag setup that's spilled to the bottom side. There's still a bit of volatility out there. This is the importance of having real method. So to be clear, on a lower time frame, we were looking for the RL3, the low 3 over here, as a possible low 3, and we needed this to turn before running this, and we expected it would. Why? Because of the key levels of significance that you've seen on this chart every time, the $2 mark. So we expected, okay, if we've come this far, we're likely to get a small technical run of the $2 mark that gets rejected. There you go. If you look up with me, the low, look at this number over here when I do it, the low. Let's go highlight that candle as you're coming down. We expected just a faintest of technical runs of the 2. What did you get? 1.992.1. And then the next candle was very similar because it's obviously beginning a reversal, and you failed to make a new low on that candle. You did 2.01, and then you started to come up. I'm actually going to take you in because there's lessons to be learned in all of this. First of all, HVF method traders trust the process, trust the method. Put on the entire plan before anything happens. Do not get influenced by the news media saying, but stay on, leave your leverage trade on, we're going to $10, you know. And just to show you the difference, by the way, in percentage terms, when you pull back, you have pulled back from here, all the way from the high there, down at its lowest point. You actually had a 17.64% pullback. And in terms of the triggering event, the total from our just-in-time is 26%. So you did more than half. If it had been 13 something, you would have been a half of your profit pullback on your just-in-time entry, which was over here. By the way, we were early, and that's where I was going to show you this aspect over here on a lower time frame. So we were looking for a low 3 there, or a possible bottoming and a subsequent lower 3 further on. What ended up happening? Let's take you into that later stage of that setup so that you can watch it with us. Going to move that risk reward ratio out of here. Okay, so we were here, and here was that 2 run. So I've dropped time frame from the 8 hour right the way down to the half hour, and here we saw, okay, we've got a couple of things going on. We know we've got our $2 key level. we know we've had, whoops, that's an interesting neckline right there. And we had a little shoulder. We had a further down leg with a grind line, expected to break, rising wedge, sell off. You got your technical run, you got a spike rejection, showing that there is buy bid coming in at $2. Down, failure to make a new low, more of a rounded bottom to the spiky left glute. You're getting a more rounded right glute, if you can see it in that context. 2.12 was our 750. That's our blue dotted line. This was all in here. So we actually were long earlier than you. Why? Because we like to be early. It's beneficial. You also got an upside HVF type structure for your right shoulder. You see the right shoulder in there? Boom, bash, boom. And complexity. So you're getting often get HVFs on small time frames as fractals inside W bottoms. That actually makes this an inverted head and shoulder. That can be left shoulder over there. The entire HVF structure is, of course, right. You fail to make a new low there. Now, many people that were just trading the W head, remember, we have complexity in our head and shoulders. This is not taught in traditional technical analysis. This is entirely HVF method, and you can see the target projected here. By the way, you can see it made that target with a major reaction as well. That's what targets do. However, you were playing in this for a far bigger move. So it should shrug it off and continue up. And so it did. So this actually led to the entries on the risk reward being very tight by trading multiple time frames. That allows you to multiply your way to wealth because you are using the risk management of a small fractal. But you're doing it at a time that it makes real sense. So the entry is there on the neckline of that structure. And the risk management, we actually have an believe it or not, we dropped time and we have an RL3 in there. But I wouldn't have risked all of that at the time. So let's just say, no, you took it safe, you played safe and you went to the, oh God, it keeps drawing it. Stop doing that. Let's pull that risk down. That's what I was trying to do. To your low 2, which is still a better risk stop than the normal shoulder of a right shoulder on an inverted head and shoulder. So typically the stops are there. So it's still a tightening of risk. The entry is the neckline, which is earlier than the takeouts of these two highs, and you would have been in this trade from then, and then you would have run all the way. Let's take it back up to the high side time frame, all the way through as represented here. I'm just going to adjust that risk for the second one to the target that was made, here, and that was at, I'll take off 0.3.36. So you actually got a 25.46 reward to risk. Now, in a real world, if you're getting paid 25.46, call it 25.5 for a loaf of bread, it's actually 25.5, yeah, 25.46. If you're being paid 25 times, you should be taking 25 times the amount of risk. If the markets are perfect, you should only win 4% of the time. We've taken 1, not 100, and we've won straight out of the box. And in actual fact, it never really went into the red meaningfully. You got a significant pullback here that ended up becoming the low 3 for us in this draw. And then it was all green numbers in spite of a firm pullback. Where did it bounce? Our funnel. Where was our volume by price? Matched up to our funnel, pretty close to our axis. And zoom, 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 and you sell at 3.36. This is efficient trading, and this is going to be hard to do because you have to trust a process that you resign and submit to. And you're going to be getting all this super news just as it was coming 3.36. I specifically noticed this and I wanted to show all the community. Listen how you're being coaxed to stay in, take profits, take the bulk of your profits. I closed 100% in the end of all leverage. I was confident of it. I didn't even leave 25% on. I banked all those profits into USDC and I didn't put them into anything else. The interesting thing is XRP was one of the first and best movers. Some other things like Sol ran on account of Trump, meme coin, and various one-off hit wonder type narratives that I refuse to participate in unless they have the perfect technical structure. This obviously doesn't have much history as a token, Trump coin and all of this other nonsense. So I wasn't involved at all with that. And largely, that was the best moment of the total 3 market cap move. Yes, Sol moved a lot because of Trump. Most other things didn't do that much. And what was also interesting to note is that XLM didn't, in my opinion, appear to do near as well as XRP in this particular instance. Should have measured it for you, but this particular break has limped the flag, and we always talk about the quality of patterns. This is a classic bull flag that broke there, but if you look at this performance since the break, it is quite underwhelming. You tested and then you broke. This is a very clear bull pole, and you have your flag there, and you got a lot of compression along the top during this period, which means any seller that wanted out has largely got out, which usually sets up some pretty good fundamentals. And initially it was looking really good up to the flag point. But since then you floundered. Why? Well, technically all we know is, I don't know the reason, the fundamental reason why. We trade our best pattern. The best pattern for trading is HVF. Who designed it? Who worked it? Who's done this for 35 plus years? You're looking at him, and you can learn to do it too. And you'll be in the better patterns. The ones that just seem to pan out more. You'll just feel that significantly more lucky. You don't win everything you do, but you get to feel more lucky more often, selling highs more often. Did I plan to sell the high? No, I had a plan and I stuck to it. What ended up happening? In effect, we sold the high. So going back to that, after highlighting that an HVF is better than a flag by some way in terms of both reliability, performance, and clear barometers as where to get out, where to place stops. If we go back to our XRP USD, you can see that in actual fact, the percentage move is far, far higher than what XLM did, and that goes against the grain. Typically, we expect XLM when XRP runs, because they're kind of cousins, younger sister type vibe, to outperform on the basis of being a much smaller market cap. But actually the news was probably ETF related. It's more about XRP than it was about XLM, so it outperformed. That might be the reason in retrospect. Before that, you don't know, I don't know. We're the last to hear anything. Sometimes I don't even hear what I'm supposed to hear, and find out from community members and various other things. But what could have happened is you could have been engaged in this particular token with leverage and made 57.77%. Now, if you had just a 50% leverage, the percentage return on that obviously goes up another half of 57%. So you're looking at, again, another 25 plus 3, another 28%, add 30 to that almost, you're going to be at about 85% that you could have made with very moderate risk. This is orange. Now I also have a hot pot account where I swing for the bleachers. It's very controlled, and I tax down any profits in the hot pot through to my warm pot and my blue pot. You'll learn more about how we discuss this pot management in terms of trading and maximizing your wealth in this crypto bull market. And it's still not going to be straight line up all the way. Let's just do a small update on Bitcoin as well amidst all of this. Bitcoin then ran after XRP had run. So there was a bit of BTC dominance that came back into play. Let's just pass by the BTC dominance. You can see you were going up while XRP was running kind of esque. Then XRP probably here, I think it made a date, and since then you had a bit of Bitcoin dominance. So let's have a look at Bitcoin. So we predicted that you would top out at the top of this broadening structure. Just because we no longer see it as relevant on this poll so much doesn't mean it's not a thing. So once we tapped 5 times here, we said you're not going down, you're hammering out a low, you're likely to have a strong move. We expected that to be broken, and you got the strongest upside move of them all so far in this broadening structure. There was a move, there was a move. And what that tells you is that each time these waves are selling are being overawed in spite of everything. So many people think we bearish Bitcoin. We're not bearish Bitcoin. I'm just more bullish XRP. That's in terms of percentage. And I consider it suitably liquid enough for my needs. They've undoubtedly, for now, this this has been chosen to be sort of a big player and is the digital gold that they want, or being positioned as that. That still doesn't stop it from disappearing and becoming zero. I just say don't trust. Don't trust anything. In fact, I'm more prone to trust something I'm quite likely to suspect as being railway lines for a future prison and digital prison and surveillance system like XRP, than something that might sit in a weird space of competing with a CBDC later. In short, the long-term durability of something like XRP, I have almost more confidence than on Bitcoin. That's going to trigger some maxis, I'm sure. I don't mean it to. I'm not trying to diss it. It was the first one and all of this stuff, but it's never been honest about its inception and what it was. And I've always accepted that this is NSA, dark state, original gangster type vibes that they could one day destroy or they could immortalize, and that means it could be one of the highest values and it could also be zero. I don't like too much of that polarity. The fact that it might stand in competition against the CBDC concerns me. Rails for the CBDC in an XRP and multi-currency world of digital assets I get, and I think that's going to be around and likely updated. So that's my reasons. And then of course the macro technical structure of XRP that hadn't had a full bull market because of the SEC, and that pivot is likely to see an unleashing of a far bigger percentage based move. So just on this move here, isn't it interesting? A couple of other things. We drew key levels here. We drew them at 93 and 92 for you here, and we also highlighted obviously the 100k is huge. Isn't it interesting how you make the 100k and you pull back and you have a real reaction? You make the top of the capping ascending grind line, you grind, you try more time, fail to make a new high, you pull back. Where do you pull back to? All the way back down to the 100k. You're getting bid on 99s and you're bouncing back up and you're at 102k. So you're now in BTC's terms in this big broadening structure overall, bouncing around that has ever broadened. Is it a trade for me in that environment? No. Could other tokens be? Yes. The risk you have is that you could go one more time to the top, but then what do? Do you come all the way back down to the 100? Could you, in fact, if we have a dollar scare, the treasury might need to go to non-standard emergency measures? They've run out of money. How good of Yellen to do that. I mean, today's the 20th, by the way. It's meant to be Inauguration Day. You guys, I'm in Australia. This video will be out before anybody knows anything about what gets said on the inauguration, if anything does get mentioned on digital assets, etc. But if nothing bullish gets said or nothing gets said at all, you could have a little bit of a softening in the digital assets. Are we going to see some dollar strength? That you need to watch the Market Sniper channel for, on the analysis of the US 10-year. I'm not going to go deep into the weeds. I've done it before on this channel, but I don't feel that's the right thing to do today. Will the dollar be moving strong? It's softened a little bit. Is it going to come back? Whatever the case may be. You need to watch gold. You need to watch commodities priced in dollars, like the oil markets. You need to watch the US 10-year, and you need to watch also the steepening of the yield curve, the 10s minus the 2s, as one example, but you can look at others as well, for ideas on whether we're going to have a fear period or if the financial aspects are coming undone. Okay, just wanted to check in with you. We've done the XRP. Why HVF method on XRP? Once again, let's show you that chart one more time. Wouldn't you like to know where to get in, where to get out, and have those levels before, not seat of your pants determining them while highly emotive greed as good vibes are kicking? Wouldn't you value having them before, where you can know your risk reward and do your position sizing accurately before the trade, so that you have a managed loss when wrong and an abnormal asymmetric upside gain when right? This is method, guys. In the absence of method, here's what happens. Listen to this message. I'm going to repeat it for you. Get it down the first time. In the absence of method, emotion is the driver of your trade. Greed keeps you in, and only pain takes you out. Hear me say this again. In the absence of method, pain takes you out. Surrendering of profits or massive painful losses, that's how you exit. Greed will keep you in. Pain takes you out. You are managed by the emotive responses of pain and greed. In the absence of method, and saying, oh, if we get somewhere up there, I'll probably close. That's vague. That's like not writing goals, saying, yeah, I want to be wealthier. I want to maybe lose some weight and do those things. You know the usual stuff. That's not goal setting. That's not writing stuff down and saying, that's my contract. This is how I'm going to do it. Every day I'm getting up, I'm cutting desserts, I'm doing this, I'm writing it, I'm making a contract with self. Here's what I'm going to do in my business. Here's what I'm doing, da-da-da-da-da-da. There's nothing coming out of vagaries. And most traders, and I've worked in academies with traders, I've worked with lots and lots of people who start out trading. You are not trading with method. If you do not, before the trade, know your stop loss, know your take profit, know your risk reward, know your sizing and the percentage of loss on your account before you get taken in, not a market entry, before you get taken into the market on a limit or a stop order. If you do not know all those things, you do not have a method. And 99% of you looking straight back at me, if you're honest with yourself, will say, I don't have every single aspect on that. By the way, I haven't mentioned time stops. I haven't mentioned other sophisticated aspects of our method that take you out if neither your stop or your take profit is run and the trade is listing, and a bunch of other key elements. But if you don't have all that I've just mentioned, you do not have method. Trading a stochastic and a MACD indicator, that's not method. That's a lagging, smoothed out vagary of your price behavior that is entirely random, that you've optimized previously on some previous piece of data and have assumed is going to work beautifully for you going forward. Good luck. I've been there, I've done it. You don't have to learn that lesson, or once you've learned it once, you don't need to learn it 3 times. Once you've learned it 12 times, you don't need to learn it for the rest of your trading career. Recognize certain things. If this game was so easy, everybody would be rich, because it's simple. It's hitting buy and entering on the computer, da-da-da-da. It's not work. Actually, it is. And adherence to process takes discipline, and it takes complete confidence and faith in everything you've done to get to that point where you can say, I've set and done what I can do. The rest is up to the market, the gods, whoever stands up and says whatever, and I will only have a sized loss as my worst outcome. I can go play, dance, swim, kite surf, motorbike ride, everything else under the sun you want to do. Let the universe take care of the rest. You've got to understand in this world what you have the power to control and what you don't. Stop blathering and mucking about on the things you have no power to control. You only get to control your response to certain price behavior and what you will do in the event of certain things happening. They may happen, they may not. Price for your losses tight as a percentage of your pot. Know your stop, know your entry, know your take profit. Have an asymmetric reward that sees you be overpaid. Your losses are taken quickly, your profits take longer. That's a good thing. Your average hold time should be much, much higher on your winners than your losers. These are all facts that happen as a result of HVF method. Grab the mini course below. Get our newsletter once a month as a bonus with that. Or better still, pick up that phone, click the link below. This is January. This is the year you get to build your wealth through the markets. And it works on all things, and you've just shown me demonstrated here. Is there anyone else on YouTube, on Twitter, X, or any other social media that told you want to be long and told you where to get out? By the way, on that target one more time, I just want to show you something. When you stop trying to sell the perfect high, when you stop trying to sell the high perfectly and you adhere to process, I was always trying to buy the absolute low, sell the absolute high, you know, the usual live the dream story. When last did you get a method that sold you on the upper wick of the winning candle? That's where we sold. That purple line, it traded an absolute high on the dot of 3.40. Virtually nobody traded 3.40. There would have been some people at 3.39. You sold at 3.36, something you bought at 2.12 with a super tight stop. 3.36. Anyone else get better than that? Virtually, if I were to get the volume by price on this, and let's just do it for an exercise for fun. From the lows here, I'm going to do a volume by price. I want to get him. Let's do it. Let's go from the inverted through here. How much percentage volume sold higher than us? Sold higher than us. Okay, so that right there. I covered it. I've got such a fat cookie. Let's just go one down. That percentage of people sold higher than us. And let me tell you, I wouldn't have liked to have had my volume and exited on that. That's the volume. Add all this rest up, the volume since there, and that's only since this low. Add all this rest up and tell me what percentage is that of the rest summed. That's what's called winning. That's what's called winning right there. And that's only for people that entered here. If I added the rest of the pattern into this, you would have a huge histo sitting back here. The volume, the percentage would be even more. I've just taken from our last points of entry, not the whole pattern. In short, it's exceptional, guys. Admit it, accept it, and it was told to you in advance. This method is the real deal. You saw it. No one else with a crossover moving average gave you that. No one with a RSI or a MACD, some smoothed out mathematical formula rammed through the price behavior that lags, and then a moving average thrown on it to try to correct for the lagging element. HVF method, patterns, volume, lead. They give you something in advance of the move. Everything else lags. Listen to this again. Patterns, volatility, and volumes are leading indicators. HVF is the very best for asymmetric rewards. You are buying the low volatility for the subsequent explosion in volatility. I still don't know what the reason why it pumped. ETF maybe? Who knows? I don't need to know. I got to make the money. And it was huge. And it's life-changing. Most people could live 5-10 years on it. And community members did similarly well in percentage terms, and maybe some of them in absolute terms might have exceeded. That is what is waiting for you for your January the 25th. When do you want to start meeting your goals? Did you write anything down for this year in terms of wealth, providing for your family? Or are you just, listen, more of what I did last year, just a whole bunch better? Okay, you know the answer to that. Only you can decide. From a very sunny, beautiful Western Australia, thank you for sharing and liking, and I'll catch you again next time. Links are below. Book a call, grab the mini course. It's up to you. We don't push anybody to self-develop. This is a self-development program masked as a trading program. Just so happens to make you more money as part of that process of learning who you are, where your weaknesses are, and overcoming it in your development, both mentally, psychologically, in building wealth, to dopamine-inducing responses that the market brings. And there was every reason under the sun why you should have held on for the $10 that CoinDesk article told you. No, we bow to method, real geometry, real early, real warnings, adherence to contract, men of principle. Catch you next time. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.